Welcome back. You're watching HFO-TV.
I'll give a quick update just kind of on the market as from our perspective. As we all know, we've all heard about permits. You saw the sharp increase in permits in the last 2 years. We're coming out of a low from 2008. We had a low of about 1,000 units permitted in 2009, and we're up to 10,000 in 2007. Still, if you talk to experts, that's still not enough. Housing hasn't accelerated enough to meet the anticipated demand. So again, people talk about how much permits are out, and they see all the cranes. They think, how can we have not an oversupply issue? We have a lot of demand that's been bent up because if you look at the graph there, we really didn't do anything in 09 and 010. And based on the fundamentals, we should have been building in much higher capacity in those years. So we got a lot of making up to do. And that hence is kind of the issue where we've got affordability issues. We just have not been able, and this is up and down the West Coast, cities have not been able to keep pace with demand due to a lot of factors, political. And so this is a big issue in terms of what's going on in Portland. Now, Portland did do inclusionary zoning, as they've talked about. That went in place in February 2017. Publicly, city leaders appear unconcerned about the drop-off in permits, citing a pipeline of approximately 19,000 units. Now, due to increased cost of labor, some softening in rents, there's kind of a question of how many of these projects may be shelved and not built that are done pre-IZ. And even with substantial increase in permits, we're still behind the demand needed for housing. So this is not just going to go away. There was such little development, as I said, in 2009 and 2010. The ramp up was slower than normal due to financing was tougher to get back then. There was a lack of builders. The market has quite a bit of catching up to do. It's almost like a rubber band. We're trying to catch up for the past few years, but we're not keeping pace for what's going on today. Privately, the city's talked about maybe reworking the inclusionary zoning and making it more of a carrot and less of a stick. But again, that hasn't been, we will see what happens on that. Now, in terms of demand and all that, in the new deliveries that have been placed, we have seen, this is from Multifamily Northwest spring report, vacancies have gone up about 50 basis points from last year. We're up to 4.85. This is from a low of 2.87 in 2015. So there has been a significant increase in vacancies, but again, we're still under 5%. And if you look in their sub-market ranges, they've got ranges from 3.4 to 6.9. That's going to range from Northeast Portland. Outer Northeast Portland, they had down as 3.4, and they had downtown at 6.9 in terms of vacancy. But I will tell you, if you look at different vacancy reports, the numbers are all over the place because it depends on what buildings they're using. So typically, we'll use some of these as a general, but if I really want to get down to a specific neighborhood, what the vacancy is, we're going to go out and do a rent survey to really dig down. Again, because they're not using the same buildings year by year, so you get a new construction project in downtown that wasn't on the report last year. That's going to skew your vacancy numbers. So again, I'm not, this shows that there's definitely a trend up in vacancies, but some of these submarkets, it really depends on what buildings each company is using to track their vacancies. We have seen concessions come back, and I'll tell you, in a lot of the analysis that we have done, November, December, and January were very tough in the city of Portland and across the state. We have seen marketed improvement in terms of applications and lasting concessions. Now, the concessions are there for Class A enclosed projects. There's a lot of supply that's coming online, and that needs just to get absorbed before we kind of see a change in that. Rents, this is again from Multifamily Northwest. They showed rents go down a penny. So they're, I think, average rent's $1.56. It's the first time since 2009 that we saw that kind of trend. And again, this is the same thing as vacancy rates and rent growth. Depending on what properties you're going to use, it's going to skew your numbers one way or the other. If you look, I think Reese had us as a 3.1 or 3.3 effective growth rate in 2017. Multifamily, as I just mentioned, was basically zero. CoStar showed a 4% increase in 2016, 1% in 17. And they're saying first quarter of 2018, we're at a year-over-year rent growth of about 1.5%. So again, Reese is more 50 units and above. Each kind of group has their own kind of specialty. You just kind of have to look at them all and kind of see what fits. So that's kind of my take on these vacancy reports. On the transaction side, we had a great year last year. It wasn't at to where we were in 2016. A lot of that has to do with institutional properties. What we'll say is 10 to 15 million and above. In 16, there were 51 of such of those transactions. Last year, there was 37. In dollar volume, they're going to take the lion's share of dollar volume in our transactions. So if you have any skew on institutional larger deals, that can skew your volume. We can have the same number of transactions, but if predominantly they're smaller, your volume is going to be down. So we've seen a little decrease This, decreased from 16 to 17. That was due to the lack of institutional transactions. On the private client side, which we'll say is 10 million and under, there was a slight increase in the number of transactions, but not real significant, from 16 to 17. This year, we're trending slower than 17, but I will hesitate to say it's tough when we're looking at, I typically won't trend the first quarter and do an annual, because we'll typically see more transactions coming third and fourth quarter. So I take a little bit with a grain of salt in terms of the lack of transactions we saw first quarter. That's going to ride out through the rest of the year. But I will tell you, there's been a lack of product available. You've got slowing rent growth, potential changes to landlord-tenant laws, which is making people have some pause. We've got record-breaking construction activity, increase in interest rates, and then the other thing is that owners are trying to get a handle on the new tax code. And so I think that's delayed a little bit as to people's plans for 18 as to what to do. So again, that may be some of what's going on in terms of the lack of transactions. I think where we are today, I think we've kind of all talked about, I don't rehash this of where we are with the legislature. We all know what's going on there. We've got a continued fight on our hands. I don't see this going away anytime soon. You have this side, you have this side. It's that missing middle that we've got to get this message out. People that are not necessarily involved in the industry but have a stake in the well-being of the state of Oregon, the city of Portland, need to know what these laws and things are going to do to their neighborhoods and to the fabric of the community. So again, I implore everybody to support this and get this message out. And again, explain to people, because people that are not in the industry, we can talk about all this, they'll gloss over. You really got to, how's this going to affect their neighborhood? What's this going to do with my next door neighbor? What's this going to do with my children? Are they going to be able to live in the city if we don't bring any housing, and things like that, so they can kind of see big picture. Portland, has been kind of the highlight of this whole event. That's why we did it here. This is why we based it in Portland, and I'm not going to go through this again, but let's just say Portland's been very tough to deal with. And I don't see that getting easier. Again, we just have to get this message out. This is some other stuff that's been done within the Metro. There's pressure on Metro to expand the UGB. I mean, we used to always say you can't have affordable housing, no density, and no expansion of the UBG. It just doesn't make sense. It's a kind of a three-legged chair. You have to give something up. We can't have all three of those. The city, nobody wants density in their neighborhood. Nobody wants to expand their urban growth boundary, but they want us to deliver affordable housing. It just doesn't make sense when you have immigration coming into the city. If you don't change and you end up dying, you end up being like a Detroit. That's an issue. City of Beaverton's working on a streamlining development process. Vancouver has already done that with an electronic permitting process, which is in place. Portland continues to talk about it. They've spent a bunch of money on it. I'm not sure where the update is on that, but they're trying to permit this process and make it more electronic, kind of get with the 21st century. We raised a bunch of money last year to fight House Bill 2014, or 2004, last year in the legislature. But again, the fight's not over. We got to continue this. This is not going to be a one-time deal. I think one thing I've learned, if I even look down the state of California, is that this is an ongoing kind of battle that you're dealing with, legislative and education, how this is going to affect. And you're starting to see a little bit of it coming back, where you've got the NIMBYs getting pressure from the, yes in my neighborhood, in terms of having to bring more housing. If we don't bring more housing, you're not going to fix the affordability issue, plain and simple. In terms of the pipeline, I'll go real fast. You'll see predominantly it's close in again, east side, close in west side. Again, this is stuff that's proposed under contract. Some of these proposed may not go through in terms of financing, cost of construction, but it just gives you how it's kind of focused. We don't see a lot in Clackamas County. And here's a review kind of the multifamily applications. So, the city's going to say there's a lot of been-up projects that are through, which is true, because everybody rushed to get in before IZ. There was a big rush in January of 17 to get your permits in, get it in, so I could go pre-inclusionary zoning. And that's why we have this inordinate amount of high permits for that year. Now, we'll see again how this all goes through. City of Portland did get pressure that this has been updated since then. They have approved these two market rate deals, because again, once they kind of said, no, we're not doing that, there was enough pressure from the housing advocates to say, wait a minute, how do we have a housing emergency and we're not allowing development? That doesn't make a lot of sense. And again, these kind of educational talks that we need to get with the city to get them going through this. If we would have talked 6 months ago, or we would have said, yeah, interest rates are definitely going to go up, maybe 4 or 5 hikes. I don't know if that's the case now. We've seen adjustment in margins, though. They've come down a little bit. So we have seen an increase in interest rates, but it maybe is not as significant as you see the increase in the T-bill rates. Sticks versus carrots in terms of chilling construction. That's more of the city. Are they going to change what they're doing to promote construction, as opposed to, kind of forcing it on people? Seismic upgrade, that's something that's affecting the city of Portland if you have older projects, what we call unreinforced masonry projects. The city is trying to put some regulations in where you're going to have to force to seismically upgrade your buildings. I understand, you look at it, it's very tough to do on apartments. It's very expensive. There's also talk as account for relocation, and then what's the time period for that? And again, our biggest concern with dealing with the city in particular is have they actually gotten stakeholders to come in and hear other opinions? Every time we've dealt with them, it almost seems like they already have a track they want to go down. Regardless of what information is told to them, they're going to go that way anyway. So it's really trying to change that narrative with them. So that's a concern. We still have capital looking for opportunity, and then the constant battles I brought up, NIMBYum, not in my backyard versus the yes in my backyard, where you have millennials saying, hey, wait a minute, affordability is an issue. We've got to get development or it's not going to be affordable. How are we going to do this within the city of Portland? So those are some of the trends we think we'll see this year. Some predictions, I think we'll see continued buyer demand. A lot of it's going to go in tertiary markets. Rent growth is going to go slower levels. We are seeing some good rent growth again in tertiary markets. Construction, I think, was finally maybe taking hold outside of Portland due to this demand. We've got a lack of supply of available properties for sale, which is interesting. We have not seen a big compression in increase in cap rates to correspond with interest rates, which is typically how it works. That's due to a lack of product out there available for sale and capital looking for a place to go. And then I think the other thing, just as an industry, we're going to continue the evolution of the renter demographic and building design. I think we're understanding now is that not everybody that's retiring wants to go live in Arizona. They want to live in urban cores. So you have millennials that are renters. You have the older baby boomers that are looking at renters, and how are you going to design buildings that fit both of those? Transportation is another one. As somebody brought up Uber, the car sharing, how does that change the design of apartment buildings? And those are things as an industry we've got to look going forward. And that's kind of it. That was just a quick snapshot of what we see today. I want to thank everybody for coming, and we'll have this stuff on our website, so if you want to look at those, if you believe it, but I would say definitely go and read them. And if you have any comments, send them to us. We'll correlate them and get them to the city. Thank you.
Our entire office specializes in multifamily real estate, making HFO the largest multifamily brokerage in the Pacific Northwest. Your success is our passion. Build your legacy with HFO. Call 503-241-5541 or visit our website at hfore.com for more information.